Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So what a crazy day. I'll tell you, this is definitely a difficult market, a dangerous market, a pick your spots market, because if you're not prepared and if you don't know where you have to have an out or where your stop is or where even your buy price is, you're going to miss out on opportunity, or you're going to lose a lot more money than you have to. If you take a quick look at the chart of the SPX, it tells a little bit of a different story, right? Here was when, we broke this trend that was in place all the way back from June. You had your methodical correction to finally, we had that really nice outside day right here on November 16th. From there, methodical move back to the 50-day. And then since then, I would say a pretty controlled pullback, right? We're still in line with the 8 and the 21-day. We're still, if you use your Fibonacci retracement levels, you will see that we still are holding above the 0.38, which is still showing commitment to this move. And within this area, there's a lot of different type of action, a lot of action that can make you money if you're quick and prepared, and a lot of action that you could lose money with if you're not honoring stops. So this morning, a few different things took place. So if you come back to me, you'll know that right around 9 o'clock, Citigroup came out with a news release. Unfortunately, they're laying off 11,000 jobs, and that's never good to hear. And they had a write-off, but what happened is Citigroup didn't go down. It went up. So the market priced it in, and that helped spark a bank move. Okay, now as far as this bank move, you know that we've been talking about Bank of America as one of the best stocks out there, showing the most relative strength to the overall sector. Good potential swing trade, tier one holding it. And yesterday, I think we talked about adding and then waiting for it to get above $10. So if you look at the chart of Bank of America, you will see that you go like this, right to where it was before yesterday, right there. Boom, wait a little bit more, and potentially right near a major breakout area. So you have this overall channel right here. Then you have it above all the key moving averages, right into resistance, and then you hear news come out, about Citigroup. And I know I was on the floor of the New York Stock Exchange, and I went over with Matt Miller, and he's like, let's take a look. And he's like, what do you think happens? I'm like, well, I'd like to see what it's doing. If it's down and it goes up, I think it's going to be a catalyst for the group. And in my head, I'm like, okay, I have a lot of Bank of America. This could be the time to run back and get involved and put on that cash flow trade for a momentum move above resistance for an additional tier, so you can make that cash flow, book some, and then ride some. So you go back to Bank of America and you will see, boom, that was the move that traders look for. This is a day to love. We talk about days to love, and this is your day to love in Bank of America. I know I tried it once here. I lost a little bit of money. Tried it here, kind of stayed with it, and then finally it perked up at the end of the day yesterday, and then there you go. So as far as a trade from where it was at 9 all the way to here, big move. Now the question is, what's next? So what you do is you go to the weekly chart, which I've been showing a lot of times with Bank of America. And on the weekly chart, it looks like it just broke above resistance. I do think that you have here, the low is what? This is like 1091. So if we have an up open tomorrow, there's a good chance that at some point tomorrow we see 1070 to 1090. But then, if you want to trail some, that's cool. But ultimately, $12 to $14 is the level I've been talking about that we could see in Bank of America. And today was a great day. If you trim and trail it, you have profits booked. You could hold some, and we've been talking about keeping it in the drawer during this pattern here. And maybe take a look, take it out of the drawer, take a look at it, and play with it a little bit, because it's definitely should make you happy, because that was a good scenario. And then some other banks, like we said, it's so specific. They didn't have really nice moves. Goldman Sachs has been a little lagging. JP Morgan, I went long a little bit. It's not quite ready. It hasn't acted that well. It's more of a B-level trade, but holding this gap, going sideways, it perked up with the banks. I would say if it were to close above 41.40, your next area comes in around there if the banks want to continue. If it, I don't think that today was a trap, but again, with what we saw in some other stocks, it's hard to, jump in with, with such velocity. Wells Fargo, pretty similar too, where usually Wells Fargo is the one leading the charge. Now today was Bank of America, but it also has a lower level resistance that I didn't choose this one, but if it wants to get through, you could see maybe a gap fill up to this moving average there if the banks want to continue, because the banks were where the action was to the long side today, besides some industrials. I'm going to get into Apple because everyone knows I trade this a lot. And we had that big move down from 700 to 505. That move rattled investors. That move, definitely shook the tree and tested investors' might, saying, "Oh my goodness, is this over with?" And then all of a sudden, November 16th, we had the Red Dog reversal, 522. Those on my virtual trading floor saw me, pretty much be long it all the way up to almost 590. And then at that point, I wanted to see how it would act, and then it got rejected at 594. So we all know what happened today. I actually came in long Apple. Let's just get into the chart so I can start going over some of the action. Very scary scenario. This was the Head and Shoulders top that wound up triggering a big move lower. First thing first is when it broke below the 21-day. That's when we said it's turning more into a two-way trade where it could test a 50-day or lower. Who knows? You test it along the way. This is when it paused, broke it, and here is your ascending high-level channel that broke. Here was your more gradual channel that broke, and then you had to move all the way down to this Red Dog reversal. From there, it was a decent swing trade, right? 522, stop at the low of the day, follow through, held higher, continued and moved methodically up to bigger resistance below the 200-day, where everyone's talking about the death cross, which has some validation. And then it kind of paused. So I think right around this day is when I got out of my swing trade type trade, or the trade I was trying to trail, and I didn't take any Apple long. And then it looked a little faulty in here, so I got out also on this day. And I said, I'm going to wait and see. So for me, I don't really always do this, but it was holding this 572 to 574. I was like, you know what? I tried it over here. It was successful. I added when it held here, so I figured I'd go home along a little. Then all of a sudden, if you're a real trader, you probably saw this too last night. I come back from my partner meeting. I'm like, why is Apple trading at 569? I'm like, that's weird. It's down $5-6. I was looking for news. I couldn't really find it. And then I actually bought a little bit more after hours, just because I was like, okay, I don't see anything. And you really never want to do that. Someone always knows something. And then I said in my head and in the mentoring class, I'm like, you know what? If Apple's any good, it should hold that 562 to 564. If Apple has the chance of keeping any momentum for potential higher prices, in my mind, psychologically, as an Apple trader, I would think that would hold. Otherwise, people are going to get scared. They're going to hear the footprints of the move from 703 down to 505, and Apple will be changed, and it'll be rattled, and the halo, could be cracking, which was that article in the Wall Street Journal you can read in our blog. So with that said, you go back to the chart. Here was that level. Here was the level that I said to myself, I'm going to get out. I might try and scalp it here and there afterwards, but I'm going to reevaluate. And that level came in right around here. Okay, this was a level that I said I'm just, it should not break this level if it's going to be any good. And then I also mapped out another level, later in the morning, right around here, this 554 to 556. That's where I came up with it. So right here was my stop out, and it was painful, right? Long from 574. 10, 15 points or whatever it was, but I'm like, you know what? It's a nick. We just had a really nice move. It was, I sold it correctly. I have the luxury of buying it, but I wasn't stubborn. I said, this is where I'm going to get out, and then I might test it a few times during the way, but I'm not going to just play the cost average game and turn a paper cut into a gusher, which happened to a lot of people. And now what took place in 3 days just engulfed how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9. So in 9 days to get to this level, it took 3 days to take away. So that's showing you how the power and the fear in this stock, and I know it's Apple, but it is what it is. Okay, and here's where it stopped. It stopped kind of at this gap. So we'll see how it acts tomorrow, but I think at this point it's just going to be a trade. Okay, I don't think you could just blindly buy Apple anymore. During this whole thing, I was methodically trying to stay with it, add to it, trade around it, but now I'm going to be very careful. The same way I was very careful during this entire move lower. And I did miss out on opportunity a few times from the short side, where every time I tested a level, like a moving average right here, and it didn't bounce, I should have been shorting there versus just getting out. Maybe this time I'll change a little bit, but for right now, I'm flat it. Who knows? Tomorrow, we might bounce up. The people might come out and defend it. The things that were floated out there was the senior vice president sold 15,000 shares. Another thing was that Nortel got a deal with China Mobile, and people were expecting that could have been Apple, or wanted it to be Apple sooner. It still could be down the road, but it wasn't. And then you had this whole story about the margins, a story about how if you're on margin with Apple at 50%, it's going to go up to 60%. So, which is Apple specific. It's not like around the whole NASDAQ, so people had concern on it. So you put all that together, you mix it up, and it was on its way pulling down anyway. And the fear that people remember in the footsteps, like a battered quarterback, it just dropped the ball and fumbled it, and lo and behold, here you are down at this gap. So tomorrow, we'll see how it go out to the chart. We'll see how it opens. If it opens up and they can't sell it, maybe it tries to bounce back and test this support that'll become resistance or this. Or if it opens lower, maybe we get some kind of reversal for a trade. But I'm only looking for trades in this thing now because I think it's damaged and I think it has a lot to prove. Perhaps it puts in a higher low right around here and then tries to go again. But at this point, I'm not going to try and look ahead. I'm just going to have levels mapped out. If you go to your 5-minute chart or your 3-minute chart, you'll see some guys made money short this thing. Gave you a few different opportunities, right? You want to look at how you can maneuver it on a 3-minute chart. All right, here was the first move lower. This is right around where I got stopped out, right around here. Okay, paused for a second, put a low in. I'm like, I'll give it to this low, and boom, I was out. Went down, and what happened? Bear flag, right? Big gap giving you pressure to the downside. You pull down, consolidated, couldn't bounce, couldn't take back any of this, and then continued. Here was your first oversold bounce. Wasn't really so potent, right? I think some of us made a little bit of money, across this little area here, so it was worth trying to trade. And then it failed. I think at that particular point I talked about saying if Apple's any good, it should hold above this area. It had to move off the lows. It broke this mini little downtrend right here, mini one, micro one, started to go, failed at what was the prior support, which turns into resistance. And then at this particular point, some guys were even drawing this little ascending channel saying, this is really weak, I'll get short when it breaks it. So if you're long, this wider range bar said, okay, it's not going anywhere. You just caught a small micro long. And then what did it do all day? It consolidated this big move lower. I know I tried it one last little time, made a tiny bit of money, thinking that maybe it wants to squeeze into the close and people don't want to be short, but I don't think it was shorts in this thing. I think it was actual sellers. So right there, reverse, got out of it. I said, I'm out of the way. And some guys said, okay, you know what? It couldn't rally for this entire time period. You could almost go to your your 13-minute chart and see that it had a beautiful for a bear. Why not? Flag or pole. Here's your consolidation, no real rally, and then boom, here's another short entry around 547, and it went down another 9 points for guys looking for an extra move into the close. So for me, I stayed away from the short side. I was somewhat just happy that I got out of my longs right around here because it could have been a lot worse riding this down. I didn't want to be stubborn, and hopefully I helped some of you guys do the same. At this particular point, I think you got to be really careful with Apple. You have to, almost like I said, when it wasn't holding the 200-day at 594 before the move to 505, I said, take Apple away from the chart. Take it away from the price action. Because if you don't have Apple in that picture, you would probably be short and you wouldn't be just holding your breath and going underwater and trying to be long. But anyway, hopefully you didn't get too beat up and you watched the price action and you honored your stops and made enough on that way up that you hedged some at near the resistance. We talked about, you going back to the chart here, we talked about the potential of a weekly head and shoulders pattern. We talked about, I think this is what we drew here, saying here's your left shoulder, here is the head, this is on your weekly chart, and here is the potential of a right shoulder. I personally thought, the market would probably try to squeeze it up to 605 to 620, but it didn't fulfill what I was thinking. It stopped right here. It wasn't even strong enough. So with that said, this is another strong bar. Look at this on the weekly chart. It just engulfed these two green candles, so it's showing you power versus the bounce. So still got to be very careful. And now you go like this. Here is your neckline. So maybe it tries to stabilize a little bit, but then if it were to break this, I don't know, guys. This is your last breakout area, which was right around 431. You can measure it along the way. There are a few other stops, like 455 or so. But the overall, if you take the real measured move of a macro head and shoulders pattern, typically it's the distance from the head to the neckline. So from 700 to just say 520-ish, that's 180 points. 180 points from 530 takes you down pretty far. What's that? Just say I'm so fried right now. So just say 150 points. So yeah, about to right all the way down to here basically, right around 420. So anyway, let's see. Let's play it out. Don't be married. Hopefully you took a little bit off into this bounce back and made some money back, salvaged a trade, sold some calls into the 200-day when it started to fail. Or today said, you know what, I rode this up, I was trying to swing it, and then once it broke this area, said I'm done with my swing trade, or once it broke this area, saying I don't want to give back hard-earned money from here. And we'll revisit it. So with that said, you have to be aware of what's going on around you, and you have to think quick, be prepared, and have a plan. And you're allowed to take losses. We all take losses in this business, but you don't want to blow up. You don't want to be stubborn, and you don't want to get emotional. You want to say, okay, I'm doing it versus this level because I think if it holds, it's okay. If it doesn't, it changes. So if something changes, you change. And that's what you have to do with everything. You know, it wasn't game over for everything in the market. The Dow, I think, was up still like, I don't know, 60 to 80 points, and some industrials woke up real quickly. You know, you look at Cummins, so to speak. This actually had a nice wide range bar. You know, at some point maybe it clears this resistance. It looks okay. Guys are pointing out Deere, still holding higher, kind of wedging. Stocks that I'm not really used to. I might have to get used to some new stocks that could continue to the upside. Caterpillar woke up a little bit for a laggard. Laggard play, you know, tried to be a little strong. Maybe it continues. You have the banks that were strong. You know what, Amazon was still trending, you know, Amazon was still higher, and Google held in there. So, you know, I guess I feel a little bit more battered because my focus typically is on Apple, and Apple had no bounce. It was selling everywhere, so it made me feel the market was weaker than it was. And we'll have to see if the rest of the market cares. Today it didn't care. We'll see how it handles it tomorrow. So with that said, shake it off. It's, what is today? Wednesday. Tomorrow's Thursday. It's another day, and we'll see what happens, and we'll just play it by ear. So Scott Riley, T3 Live, the recap. See you tomorrow morning at the morning call with Lindsay, and it'll be another day.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.